Alright, what's going on, y'all? Today I'm going to be making a video on a simple trick that's helped me profit in the market. Today I made $5,000 trading using this strategy or tip or whatever you want to call it. And so we'll be kind of going over what it is, and we'll go over an example, and I'll show kind of a live trade while I was trading doing this. So this is my ebook. If you want access to it, you can join on my free Discord. Link is in the description, and I'll give you access to this ebook. But we'll be talking about scaling into trades. So scaling into trades is buying into a position at key technical areas with the goal of getting good dollar cost averages for your fills. So sometimes your stock isn't always going to hit your exact level, and scaling allows you to get early exposure into that trade just in case it reverses or it goes without you. You have some exposure. It also allows you to get a good dollar cost average so you can hold on to your trades longer without getting stopped out easily. So rules for scaling into a trade is you should always, whenever you're trading, you should have a set amount that you're going into that trade with. If your trade size is usually $1,000, you want to stay pretty consistent with that until you're ready to scale up. You don't want to go in $5,000 on one trade and then $2,000 on another trade and $1,000. You want to kind of keep it uniform. That way you're consistent on what you're risking, what your profit is, how much percentage or ticks you need if you're moving in futures. You can just have a general idea of your trades. Now if you're more confident in a trade, there's nothing wrong with sizing up, but for the most part I would say you want to stay pretty consistent on your trade size. Do not try to scale into trades too early without having your risk in mind or key levels in mind, just in case the stock doesn't do what you want it to do. You're not just in extra early and burning money. And don't scale into trades that are against the trend. Always try to stay with the trend. It's way easier to make money when you're with the trend. Now, if you have the right confirmation to catch a trend reversal, do so. But when it comes to trend reversals, you want to be risking, you want to have a tight stop loss, because you don't want a stock to just keep running and you done lost way more than what you were risking because you were trying to fight the trend. Also, you want to scale in. You want to scale in at technical spots, not just anywhere on the chart. And so a technique you can use is the 3-to-3 scaling technique. Divide your position size by 3, and you can use that to slowly scale in. So if your position size is 1,000, for your first ad you can do $330 worth of contracts, second, and third, so on and so on. And like I said, you want to be around an area that you're confident in. So whatever your level is, you want to have confidence in that level. You want to have a risk in mind. If you can't define your risk just yet, that's where this technique comes into place, because you could start off with only risking 30% of your true trade size. And if you're wrong, you're not going to take as big of a loss as you would have if you just went in with your full size. And this also helps you with drawdown. When I was first trading, I would go into crazy drawdown, and my trade would have to recover so much of my loss for me to go green. And by the time I went green, it was just a small amount of green, and I was missing out on hundreds or thousands of dollars, all because I had to recover from that drawdown. All right, so this is kind of an example of a trade that I took last night where I was scaling in and out of the position. So this is a gold trade from like 3 a.m. last night. This trade actually made me, I think it was about 3,000 maybe. I ended the day in profit about $5,000, and this trade, I think it did like 3,000, and then I had a good trade or a good few trades on NQ that made me the rest of that. So these orange circles would be my entries, and then these green, And then these green circles is where, I kind of took profit and I sold. So you can see I had my key level, 4110 or 4109 is the level I was watching. You see we rejected off this and we found some support here. And so, like I said, this was a level I had. So once we hit this bottom and I seen us kind of bouncing back up to get above this level, I got in on some starter contracts because I was like, all right, I'll get in and I'll just have my risk, down here to start with. And if we tap 4100, I'll just be wrong on the trade and I'll see how we react at 4100 and I'll possibly get back in this. But this is the level that I wanted to see hold. So I wasn't even worried about this level just yet. And so I got in, I think around 5 contracts. I trade futures. I'm trading on a prop firm. And so I started off with 5 contracts. And I was probably risking from my entry like $100-200 max. And so I seen us push back up and we formed this low, we formed this wick, and the next candle printed and I seen us starting to hold this level. Like this wick never broke below this level. So at this point, and I'm also scaling on the lower time frames. I'm not just looking at the high time frames. I'm also watching the lower time frames to see, how we're pushing up, how we're reacting, and seeing if I get any confirmation on these lower time frames as well. And so once I seen us holding, our level, I don't know where it went. There we go. Once I seen us holding this level, I actually added in to my position. I think I might have started with 5 or 10 contracts, and then here I added another, 10 or 15 contracts. My total size was 20 on this trade. And so once I got my full ad, the price action started to kick in and all my confluences started happening. And so when it comes to scaling, this is only one piece of the pie. In trading, you need so many different tools and resources to make a good trade. If you're slacking in one area, then your trade might not go as good as it could have went. So like I said, I'm paying attention to my levels. I'm paying attention to the price action, the volume that's coming in, and just all those things that are happening. And, everything was giving me the green light to add to this. And I became confident in my level and confident in my stop. And so, like I said, once I seen that this was holding and we had this swing low, I made this swing low my risk. I knew I had my risk defined now because, and our market structure, I know that if we're truly going to reverse, this downtrend, or if we're truly going to hold, if you look from a, higher perspective, if we're going to hold this trend, then we shouldn't break, this swing low. And so I see on the 5-minute that we're holding this swing low. And so I have my risk defined and I have my level that I'm confident in. So now I can start sizing in, and I know the amount I'm willing to lose for this trade, because you should always be ready to lose in a trade, right? The more prepared you are for a loss, the smaller you can make it. So I was prepared to lose this trade just in case. I knew the amount I was risking. I was fine with losing that amount, and you see the trade started playing out in our favor. So once we hit this 41.15 level, I took some trims. So I shaved off maybe 5 contracts here, and me taking profit here now gave me enough profit to be in this trade risk free. So the trims I took here made up for what I was risking on this trade. So now I'm risking $0 on this trade. So even if we reverse, I won't lose anything on this trade, right? So, and now I still have 15 contracts left. And so as we're hitting our next level, I'm just taking more and more profit. So from here, I might have profited whatever amount, let's say $300, right? So now this 300 is basically just covering this trade. So now I'm in this trade risk free. The next trends I took, let's say I profited $500. So, 5 plus 300 is 800. So now I'm up 800 on this trade. as we're continuing to push up, I'm just taking more and more profits. So here I might have profited another 500, and that's whatever it is. And you see we have, this pullback right here, and this pullback was actually at a fair value gap. Give me 1 second. Where's it at? Where's it at? Where's it at? Okay. So this pullback was actually at a fair value gap. And if I need to make a video on just kind of different confluences and things I look for while I'm trading, I can do that. Just leave a like and a comment saying that you want to see some videos on that, and I'll definitely make some. Or join the Discord and ask questions, and I can help out. But we have kind of this sweep to this fair value gap, and in the middle of it, you see we kind of hold it perfectly. So, and this is at my 41.15 level. Like I said, it didn't hit it perfect, but it's just a point off of that level. And so right here, I actually add more contracts, and I just put my stop loss like down here, I think, or at the end. I put it at the bottom of the fair value gap with just a little bit of room. So now I add 5 more contracts, and I have my stop here for those contracts that I just added. So I'm only risking like $200 max on the contracts I just added. And now what I'm doing is I'm basically playing with profits, but if this trade continues how I want it to, the profits I just made that I was risking just made me even more money, right? And so you see we get the push up and we continue to trend, and I get more trims off. So up here, I went from, I think, 3 contracts right here, and then when I added in, I was at 8 contracts, and then up here I sold some more, and I might have been at like 5 contracts or something like that. And I had to take profit of 41.50, which you can see it pretty much hit, but I actually got stopped out of this trade. Like I said, this was at like 4 a.m., so I fell asleep on it, and I got stopped out of my trade like break even, with the trade, and I wasn't able to get this full take profit. But if it would have hit this, the last like 3 contracts I had probably would have did $1,000 to $1,500, probably even more than that. But you can see, like I said, it ended up hitting our level. We just got stopped out before. So if I would have had my stop, at this low still, our initial stop, we would have profited, but I didn't want, a green trade to go red. So like I said, with this trade, we still profited like $3,000, but it could have been easily a $4,000 or $5,000 trade. So I'll kind of show the recordings, and you can see me kind of updating how I was executing this trade. And all right, so you can see that it is November 25th, and this trade, or this screenshot, was at 3 a.m. So like I said, you can see kind of my entries here, which line up on our chart, and you can see where I took trims. Like I said, I took this screenshot after I took trims, so I'm pretty sure I was in 20, if not 25 contracts. And you see, just from that small push up, we are already at $1,100, and that's after the trims. And see, now you see I have this video, and now we're down to 7 contracts, but we're still up $1,000. So we're still going up in profit, and you can see I just kind of show that we are moving. I am on the Take Profit Pro account, and now we get our next trims off about $500, and our trade is still going. And on the next one, now you see we're in 8 contracts, so we actually got our add in, and you can see we're still going up in profit. So now we're just waiting for the next leg up, so we can take some more trims, get some more profit, and let this continue running. So you see that on the ad, you see how tight my stop loss is. Like I said, it's right under that fair value gap, and as long as we hold that swing low, we should continue to go up. And then you see right here, we shaved off 3 more contracts, and now we're up $500. So we're up about $100 per contract. And now I'm just kind of playing with my stop loss. I ended up leaving it where it was. But you can see our account almost at 5,000, just letting it run. And like I said, those 5 contracts, we were up 500, and the level that it hit probably gave me, over $1,000 easily, but or it would have. I'm sorry, I got stopped out before it hit, but if we hit that target, that would have easily been over, $1,000 on those last few contracts. So hopefully this video helps, kind of understanding how to scale in and out of a trade and just what it is. I definitely recommend everybody practice it, even if it's with just 1 to 2 micro contracts. Just practice this and continue going. Also, I'll prove to you, 1 second. Okay, you can see that I did get a payout. I only requested 3,000 because I wanted to leave some in my account to continue building it and continue building a buffer. But I did just request a payout. You can see it's 7 o'clock on November 25th. And now I'm just waiting for it to transfer to my account, and we'll do it again. So like I said, hopefully this video helps. If it did, leave a like. Check out the Discord. I'm in there every day. If you have any questions, just ask me, and let's continue to catch some green trades.